and welcome to London Eye. I'm SHEREEN, BHAN, and we're in conversation with Nick Moakes. Nick, appreciate you joining us here on CNBC TV 18. Let me start by asking you about your belief in the India story at this point in time, how much money you're willing to allocate to India, and whether you're looking to review your allocation to India given the strength of the story at this point.
Let me start from the perspective that we come at this as a very long-term investor. So our allocations, if you want to call them that in a sense, we tend to take views which are as long as a decade or more when we're making investment decisions. The Wellcome Trust is an independently funded endowment, so we can afford to take those long-term decisions. Now, what's attractive about India is clearly you have a young, vibrant, entrepreneurial population, with at least large parts of it being pretty well educated as well, so there's lots of demographic reasons to like it. The disposable income of consumers in India is going up, which means that consumer-facing businesses in particular look really interesting. That said, they're never cheap.
So valuations are looking stretched today?
Right, I think India, the good businesses in India, the businesses which suit an organisation like ourselves are never that cheap. That said, they deliver sufficiently interesting long-term growth that if one is prepared to take a long view and ride out volatility, then there are always interesting opportunities to be had there.
So any sector in specific that you're looking at when you look at these long-term bets in India, you know, would the financial services sector be a sector that you're currently sort of evaluating opportunities in?
We are already invested in the financial services sector in India, and I think that there's a good reason for that. India is relatively underbanked. The access to long-term products like mortgages is just something that's barely been explored really, and there's multiple years of really interesting growth ahead as a result of that. But I would also add to that there's a lot of opportunity in India in a lot of consumer-facing businesses, whether that be in e-commerce and retail or whether that be in the basic consumer goods sectors as well. It's really that side of the economy that we find exciting rather than perhaps the heavy industrial or infrastructure stuff, which tends to be more closely tied to, if you like, government policy and those sorts of things, which are beyond the control of most investors.
Yeah, but, you know, speaking of financial services, HDFC is what you like in India, and that's what you've invested in. Is there anything within the private banking sector, for instance, that you would consider or have looked at or evaluated? We are
long-term owners of HDFC as an institution. Obviously, I don't want to go and talk about individual stocks, but the basic thinking there is you have an organisation which is extremely well managed, and where from a long-term perspective we can see a growth runway stretching off into decades, if not years, if not decades. So from that perspective we're extremely comfortable with that position, and the nature of our portfolio is that we tend to run pretty concentrated portfolios, so we're unlikely to be invested in more than one financial services sector in India at any one time, and given that we're comfortable with what we own, unlikely to change in the near future.
You know, since you're talking about consumer-facing businesses, would that broadly mean FMCG, or are you willing to maybe even look at things like telecom and so on and so forth, or, you know, would you even consider technology, and that of course is the big India story?
We have quite a significant amount of exposure to these sorts of areas, but not in public markets. We have some in public markets, and yes, FMCG, yes, to an extent telecoms as well. But actually the bulk of our exposure to this sort of consumer-facing stuff tends to be through private companies, through venture capital type opportunities, rather than through the public markets.
What's the view on China at this point in time?
Well, it's a very appropriate time to be talking about that, I suppose, given that we've just had Xi Jinping here as a visitor in London, and of course...
And there's going to be a lot of comparisons being drawn about his visit and now Prime Minister Modi's visit to London.
Yeah, absolutely. China's going through a very long economic transition between an export processing economy which is utilising cheap labour to really kickstart the economic development process, which is where we've been for the last couple of decades, or really since the late 70s, to a much more domestically driven economy, which will be much less resource intensive, and that process will involve slower GDP growth, and it will involve some of the people and companies that have made a lot of money in the last 2 or 3 decades having a much tougher time. I think what we're seeing there is entirely natural and entirely to be expected. That said, as in India, there are some really interesting winners in that process. If you've only got to look at the development of, for example, e-commerce in China, to see that there are some companies that are doing extremely well in that environment as you get to a more consumer-facing economy. But it's very tough to make money in China as a foreign investor.
You believe that it's going to get increasingly harder to make money in China?
Is it increasingly harder? I think that's a moot point. But the starting point has to be that China is an incredibly competitive economy. It's one where there are very few barriers to entry into most businesses. And therefore, as soon as somebody has a bright idea, lots of other people with cheap capital tend to come in and compete away profitability. There are some exceptions to that, and we've seen, for example, there are a couple of, as I say, the big e-commerce companies in China, the JD.coms, the Alibabas of this world, that have built positions which I think are quite difficult to dismantle, at least in the short term. But generally speaking, most companies have found that if you don't have a really sticky brand identity, it's tough to make money. And even if you do have a sticky brand identity, the fact is that intellectual property protection historically has not been particularly favourable in China, which has made it difficult for people to exploit those brands.
You know, you were talking about e-commerce opportunities in China, and there's a lot of buzz around e-commerce in India at this point, and of course they're not listed entities just yet. But have you looked at the e-commerce story in India? Do you feel confident about its success?
The simple answer is very much so, and that's where we have a degree of exposure. Now clearly the interesting one would be what happens to Flipkart as and when something happens to Flipkart, and I think that will be a really important bellwether for the whole sector, whether that is well received when eventually that becomes a public company.
Do you think it'll still take a while, a couple of years, before an eventual e-commerce listing in India?
They don't need to list in the near term.
Because they've got enough cash coming in.
Correct. They've got enough capital. They've raised enough capital in private markets. And this is a phenomenon that we're seeing in the developed world.
Are you not concerned about the burn? And they continue to burn significant quantities of cash.
Oh, absolutely. These businesses globally, in their early stages, burn a lot of cash. But the nature of the opportunity in India is that you do not have the same level of established retail businesses, the bricks and mortar, if you like, that are there to be competed with. So that there's a much lower hurdle to competition, in a sense, in India, which is why it's such an exciting business. But, big but, they're having to build from scratch, which is why they're burning so much cash. So
you don't believe the valuations are looking stretched at this point in time for the likes of Flipkart?
The honest answer to that question is I don't know what the right valuation is. And until the market is asked to determine that valuation, I think what we're doing here is people are pegging out their pitches, and they're effectively claiming ground in the expectation that this will be a dominant business. And you know, given that we have some investment there, I hope that's right.
So would a majority of your Indian investment be in the e-commerce sector, in the likes of the Flipkarts? Not
a majority, but certainly we have a significant amount of exposure to that sector, yes.
And how much would you have invested in India currently, and would you look at upping the investment in India, given the fact that the economy is growing at about 7.5%, and you know, the macroeconomic story looks much better in comparison to the other markets today?
We have probably $500 million or so invested in India at the moment, in the context of a $30 billion global endowment. So it's meaningful. The macro story in India, as we were talking about earlier, you know, there's some very positive long-term drivers, and clearly the fact that we've had some economic reform has been a good thing. Arguably, we could do with a lot more. We could certainly do with some more improvements in infrastructure. We could do with less bureaucracy. There's lots of impediments to more rapid economic growth in India.
Does it continue to be a frustrating experience for foreign investors?
Always. Always. You talk to anyone who's actually doing business in India, real business as opposed to just the investment business in a sense, and there is always a sense that there's too much bureaucracy, it's too difficult to get things done, and whilst people are making money, people are not making perhaps as much money as they'd like to be making. That said, if you compare India's economic position today with that in many other emerging markets, it's in a much better place. You know, we have had this consistent run of growth. We've got very favourable demographics, as I was saying earlier, so there's lots to like.
So Could that $500 million sort of, go up over the next few months, or?
We really don't think in those sorts of timescales. I mean, the basic reason that the Wellcome Trust exists is to fund improvements in health globally. We're a medical research charity. So we think on a long-term timescale, and that's true in our investment portfolio as well as in our charitable side. And we're doing quite a lot, by the way, in India on the charitable side as well. But I can't really tell you what we'll do in the next few months, because that's not the way we think.
No, I understand that. But, would something like healthcare, for instance, be interesting to you from an India standpoint?
Well, we're doing a lot in healthcare in India, but it's on the charitable side rather than on the investment side. I mean,
you don't see the headroom for private sector growth and the potential for the private sector in the healthcare space?
There's plenty of scope in India for improvements in the healthcare system generally, and to the extent that that creates interesting economic opportunities in the private sector, absolutely we'd be interested in that from an investment standpoint. But we have to be very careful to separate what we do on the investment side to what we do on the charitable side. On the charitable side, as I say, we're doing a lot of work in India. We're involved with things like looking for new treatments for TB. We're involved with affordable healthcare. We have an alliance with the Department of Biotechnology in India, which is funding research projects throughout India. So we're doing a lot on the charitable side. But to be absolutely clear, in order to invest in healthcare space, we would need to see that as a genuine commercial opportunity.
Nick, it's been a pleasure speaking with you. We appreciate your time here on CNBC TV 18, and thanks very much for joining us on London Eye.